All right, all right. Yeah, markets, no bueno. Let me do this while we're waiting. ES has got a 13.5 rotation lower. So 27, 40, and 13 should be what? 53, 54. There's 4 rotations for ES right now. Harmonic mid on the 5-minute right here. No closes below the mid. Play it back to the zone. Again, this was 289 to 294. 5 ES points. NQ's doing the same thing, bouncing, but NQ's at a harmonic zone. I don't know if anybody can hear me or not. I'm probably talking to myself, but that's okay. I'm good with that. Okay. I don't know. I'm sure y'all sitting there laughing. Bet's dumbass gonna sit there talking to himself for an hour and a half. Yeah, again, the 49.70 puts are marking, 50.70s are marking $20. You're getting $12 to sell one. I'm watching them right now. Is anybody trading them? Let's see if I can get filled before we start the stream. Yeah, I would have tried to do them at the harmonic mid. Because now if you leg into them, you're going to get screwed. I went 12 and 21.30. That's stupid. I'll post in the workshop. The other guys aren't listening, so I don't want to distract them. And if somebody asks me, I'm not going to be able to comment or coach anybody through it. So, to each their own. But you guys are on with me, so there. 9:30. What a Sunday night. Guys, again, the premiums are high for a reason. And usually price will follow. All right, we got enough. Can y'all see how many is on? Because I can't. If you can, we'll start working. No. AG, I'm just going to use Nvidia. I did it for some of our members. Nice, Goomsma. I did it for some of our members, and so again, it's just it's just chart construction, right? So you can do it for anything. The whole objective, guys, is go back tonight, tomorrow, and do this with whatever you're trading. QQQ, SPY, build your own levels. I'll post PVI in Reddit, so you guys will be able to pull. It's 505 lows for SPY, 561 highs. We've already entered into some of our PVI trades. And again, is what it is. So the intent is just to be thorough and teach. Again, you don't have to do this, but man, when you go through it all and you see the data on the weekends, then like those 1 bars on SPX, man, they're standalone bars in the middle of 2 clusters. They're going to be important. So, all right, guys, we're going to go real quick. I know the markets are dropping, so I'm going to start with I've got 2 NVIDIA charts. Again, 50, 100, 200-day moving average, red, white, blue, right? America or France if you're France, but it's America. Red, white, and blue, 50, 100, 200-day. The dots are simply the 21 EMA. I don't need them, but they're there. And then gravity points, obviously, I want to see. The first thing I will tell you, all ITG members are going to jump out, is you're going to see 3 gravity points, and they're all still positive, and A is not crossed down underneath C. These are magnets of sorts. They're like the 50, 100, and 200-day moving average. They move at different speeds, at different rates of acceleration, but they kind of give us an idea. Because we do not have a negative slope, we are expecting NVIDIA to bounce. Now, let's be honest. NQ is down 450 points tonight. Do you think a 2.45, 2.5% drop in NQ is going to impact NVIDIA? Yes, it absolutely is. However, that doesn't change the process. Go through the process. First thing you should notice out the gate is we got a gap right here from May. Mark it. I draw gaps with orange boxes. You guys do this. What I'd like you guys to do, if you could, and I'll talk. I'm going to talk a lot, but as far as instruction stuff, you guys can follow. I would ask you guys to pull up a blank 1-day NASDAQ, a 1-day NVIDIA chart, and draw that gap. Right? Go right here. Get the box. Get the rectangle and draw the gap. I'm not going to do it. I already did it. I did it 2 hours ago. Actually, I did it this morning, and I shared it with Rick and a couple others. We do have some members that are underwater in NVIDIA. NVIDIA is blue on the option pricing model. For tomorrow, let me see if I can copy that. So I'm not going into it, but when you start looking at option pricing model, any of the blue values from Friday's close means they have twice the value or twice the return per unit of risk than the QQQ has. QQQ is 90. These are 43. Everything below 45, 45 and under is blue. That means it's got twice the value the QQQ calls have. Now, we're not going to open where we close Friday. We know that. But you're getting a habit where you're buying white. White is undervalued. Blue is 2 times the value. Deep discount. Yellow is just the baseline. Orange is overvalued. More expensive. Not price expensive. Price expensive is not what we're talking about. This is the ratio. These are the calculations that are money. Orange is telling you that the options are more expensive. You're going to get less return per unit of risk than if you just traded the index ETF. So if you're buying options and you're buying and you want to trade these long, just know you're going to pay an extra premium for them. The red are more than 2 times the index ETF. So if you want to, there's nothing wrong with wanting to own a red option. But if you want to own it, you're better off doing it with a debit spread so that you can mitigate some of the excess premium. That's all it's telling you. Like here, ASML this week. These are for Friday's expiration. ASML's 314. QQQ's 91. It's over 3 to 1. Does it mean ASML's not going up? Does it mean it's not a good trade? No, nothing to do with direction. It's just a comparison tool to compare each one of these stocks and tickers to their peers as well as to their index ETF. So Nvidia is blue. So what do we want to do when we have blue? We want to own it. We want to buy blue. Calls and puts, both sides. You're going to get more premium, more return, more profit per premium with Nvidia than you will if you trade QQQs. Likewise, if you go SPY, you go down here and you look at some of the SP stocks. Caterpillar's got earnings. Goldman Sachs is orange. Chevron, Exxon, post earnings, they're back to blue. Okay, so that's just OPM. All right, so we draw your gap. Now, if you don't have a 50, 100, 200 day moving averages, don't worry about it. We don't even need them really. I just like it because it gives me perspective. Because we know as long as we're trading, as long as we're trading above the 50 and the 200 day moving average, institutions are long. It's when we get down here below here is where institutions start getting shaken out or taking their trade off. Okay? So that's the first thing you need to notice is gap fills. Where are they? What do I need to do from it? Now, I'm going to go into a Momo analysis because it's part of my process. And then I'm going to start looking and go, okay, this is what I see from the chart. And then I'm going to go and say, let's start looking at technical indicators to see if what we thought was accurate. Now, here's momentum. Here's our Momo. Again, the blue and white lines are to the daily chart. They're set to the chart. Blue and white is just a standard oscillator. Speed is not disclosed. How the settings are there, we don't really disclose it. We do offer it to ITG members. But the daily, we got into an oversold condition last Tuesday, the 30th of July. And we were oversold on the daily and oversold on the weekly. And the daily corrected back, and we had this nice push, right? If you go to, I guess I can go here. If we go to extended trading hours, you'll see last Tuesday we came down. We got to 99.77, whatever it was. We were already correcting back. Price was making a lower low. Momo was already moving back up. I don't recommend using Momo on the 4 hour, but it can give you some tips in ETH. And we were into the gap. The gap's not there when you go to ETH, but we were into the gap. I went long 1,500 shares at 162. I think, 162 was my basis. The top of the gap is 101.64. So just getting back up above the gap, I was already $1 profit. 1,500 shares, I wrote them up. 108, 113, and then 118 is where I exited out, and that's where the 50-day moving average is. Again, could I have gotten more? Yeah, sure. But the entry is what gave me a profitable trade, not where I exited from. Okay, so that's Nvidia. That's where we are right now. If I go to the daily and I take off the ETH, we are oversold on the weekly. Okay, but Nvidia ain't going up right now. Not with the market. So you move left and you draw a line and figure out where your gap came from. Is it going to fill the gap? Yeah, probably at some point. Am I going to take a trade exclusively off the gap? No, no way in hell. Then the gravity, or then the 200-day moving average down here, and then our gravity points up here. That's it, right? This gives me a pretty good idea of daily is correcting and might bounce. Weekly is still oversold. Good chance we're going to move up, come down. I think we're going to go back up here until A crosses over C. I think we're going to come back up to the channel. Again, I say that as if the NASDAQ was not down 450 points. The fact that NASDAQ's off over 400 points, we're going to scratch all this. It doesn't matter. The process is what's important, right? The process is what's important. You don't need to trade it, but this is the process. So then I'm going to flip to a different chart. I've already drawn a whole bunch, but you got the gap here. I got a black line for the gap. It's a different color. I've got all the stuff I've already drawn, and I'm going to walk through this with you guys. As far as EMA, I use a 21 EMA. A lot of conversation about open closed. I do closed on the daily. Here, if you do open on the daily, it's orange dot. Again, if you're worried about these 50 cents, then go have at it. Have anxiety the rest of your life. Look at the orange and yellow dots. Guys, it's a misnomer. Don't split hairs, guys. You don't need to. Okay, so then as we start talking about market structure, the first thing I want to encourage everyone to do is get an idea of where we are. Okay, then you're going to go through the process. Nick posted some great stuff in his journal. We've been talking about it for a while. But you need to find out where we have major swings. Swing high, swing lows. Okay? That is not hard. It'll be hard for you to draw it on your chart because it takes a while to draw those damn circles. Thought I had one more, but I guess not. Okay, here's the circles. Daily, 4 hour. 4 hour, that's why it's there. That's fine. These are just major swings. Let's not get way back into yesterworld, but let's just go here for now. Right, we got a swing low in January. We got a swing high in beginning of March. We came down in April when the NASDAQ dropped. We broke structure. We went back above. We made an all-time high, and that's still here. We made a low in June. We came back up. We made a lower high. Okay, right here on the 11th of July, the NASDAQ topped on the 13th of July. On the 11th of July, we made a lower high than right here. As soon as we came off, Thursday, Friday, Saturday, Thursday, Friday, Monday, Tuesday. As soon as we came off, we put in a lower high. As soon as we broke this, Trading 101, as soon as we broke this level, man, you're thinking short. You need to be thinking short, right? Market structure here. Okay, but that's beside the point. Let's just get in the habit that all we're doing right now is we're just drawing swing low, swing high, swing low, swing high, swing low. That's it. Each one of these circles, because they're swings, a new swing high, swing low. We broke structure here, so we'll create a demand zone. We break structure down here. We went back up. We broke structure again. There should be another dot circle right here. Why? Because we broke structure. Not sure why I didn't do that earlier. But so then the question is where we are right now. Where did it come from? Did it come from here? Did it come from here? Did it come from here? Again, if you get in the habit of splitting hairs, you're in that argument about secondary issues, right? Baptism, full submersion, or water on the head. You ain't going to combat over that stuff. Don't fight it all out. Does it matter? Yes, no, maybe so. Who knows? Who cares? You can't be literal. You just got to get an idea. And then from this, we get an idea of where our supply zone is going to come from. The reason why this is stretched this way is because I did it on 4 hour. I draw my supply zones on 4 hours. And I put it here because do we have a supply zone up here? Is the first question. Well, if I go to regular trading hours, did we break lows? Did we break the swing low? We didn't. If we didn't break the swing low, there's no supply zone here. But then we come back up here and we fail to get above the high, and we come back and we definitely break this low, break of structure right here. This becomes a supply zone right here. So what I do on the 4 hour for me is I go look and I see this was a doji, but I go look and I go, okay, I want to draw a 4 hour candle on the last green candle. The last green candle on the way up, and we reversed. The fact that we went up and we reversed off it sharply is another indicator that it's probably a supply zone. We had it here, but we didn't break structure. Right? We close, we didn't quite break structure. But when you do it here on a lower high, there is no reason why you don't go draw this, drag it over and go, okay, I'm going to take it up to that doji right next to it. Now this becomes my supply zone. And it started here, didn't quite fulfill the definition. This is like the slingshot scalping tool we do, where the signal line just barely crosses zero. And then it's still slingshot and plays out. Okay, if you're literal, you don't take it. But man, we got back up into it, and look where we went to. We went right to the same area that would be the supply zone had we broke structure. This would be the box. Went right back up to it and couldn't get above it. If we got above it, guess where we were going? 136 to 140 all-time highs. No question asked. We rejected, so guess where we're going? Back to this low. And test this low. And fill this little gap. And what did we do? A few days later, we gapped down. And what did we do? We went it right in here. We filled the gap. We broke that low. We broke that low right in here. All that's coming from is swing high, swing low. Swing high, swing low. Swing high, we're now making a new swing low. And based on everything tomorrow, we're probably going to open up down here in the below 100. Unless something in the NASDAQ changes overnight. Okay, does that make sense? Everybody good? Let's see what my rays are. Oh, all-time high. I want to keep that on there. And that's just the gap fill. So you don't have to necessarily drag it over. I just draw a line on it. I create a box just so I know where it's at. I don't want cluster in my chart. And I want there. Okay, so we got that, right? Everybody, daily pivots. Swing high, swing low, swing high, swing low, swing high. We don't know where swing low is yet. From there, go from the daily, go down to a 4-hour chart. If we broke structure, then draw a damn box. The last green candle before a drop, where we broke structure. The last red candle before we broke structure. Where did we break structure? Right here. Swing high, or if you want to say, well, that wasn't really structure, here, it don't matter. Don't split hairs. Look at where the damn gap is. The gap occurs right where the two swing highs were. Structure breaks. What I tell y'all, there are no coincidences. Everything is price, volume, and time. Those three variables, every indicator, everything you're going to throw on a chart, ever in the history of the world, is going to be off price, volume, and time. Here's your price. Here's your price. Here's your gap. Here's your price. They have not. This is a big void. We're going to probably close it quickly, especially if NQ is super red tomorrow morning. We might close it pre-market. Just keep an eye on it. So down here on the 4-hour, I would go to the box, make me a little rectangle, and I want to know the last red candle before we started the uptrend to break structure. So this is going all the way back to April. So you bet your butt Higher time frame, demand zone. There, it's there. I got a demand zone, I got a supply zone. Is there a demand zone from here? There was. No, we didn't break structure. So, is there a support and resistance level here? Yes. So when I see people's chart and they automatically got supply zones auto charted on here, that's the biggest crock of minutia bullshit I've ever seen. You sit there and look at them and you're like, well, wait a minute. What break of structure did we have that would create a supply or a demand zone? None. What is a demand zone? We have an overwhelming number of buyers here, aka demand for the stock at this price. What happens? We stop going down and we move higher. What happens right here? We have an overwhelming, massive amount of sellers that say, hey, the stock's gone too far too fast. I'm closing out my shares. They short it or they sell right here. This is the sellers pushing it down. This is the buyers pushing it up. Demand, supply. What supply? I got too much. It's at a price. I'm going to sell. Everything's got a price, right? I mean, if you're a 6 out of 10 in looks, right? And you're right here and you're like, well, it's a pretty good price. And you go down here and you're like, no, I'm better than that. And you get way up here and you're like, man, this is way out of my league. Sold. That's the market. And so we create these supply zones to give you an idea. Where are sellers saying the price is too expensive? Where are buyers saying it's too big of a value? The crazy part is when you look at this, I don't want to do a fib. When you look at this, look at the percentage. 65 points. 86% change from April. I mean, is the stock really 86% more valuable in Thursday the 20th of June than Wednesday the 24th of April? No way. But buyers say it was undervalued here. Sellers say it was overvalued here. That's Nvidia. That's what we're dealing with. So now we want to get into, guys, and that's just it. That's supply demand zone, guys. It'll change your trading, especially if you're a swing trader and you're a macro trader. You got to be able to spot those. Then we go back and we start looking at fib structures. So I've done 3 fib structures. You can work on those overnight or sometime this week. Here's the first fib structure. We're going to go way on back here to the market. I'm going to have to go weekly. We're going to go weekly all the way to October 22 lows. Right? Nvidia was trading at $10. No, it wasn't. It was trading at 104. Only reason I know is because I was short the 126 puts naked. And instead of taking delivery of the stock, I closed some trades out. I didn't really take a loss, but I didn't make any money on it. What a dumbass. So this is a longer term one. And you just need to be aware of the halfback. But what's crazy, you go all the way back to 2022 to all-time highs. And remember that demand zone we just built? Like no shit. You got to be kidding me. It's right at the halfback. 50% line. So knowing that, I want to go ahead and identify 2 things. This zone becomes very, very important for Nvidia. I don't think it's going to play out, but you look at the zone, and that's the zone. In the event that it's going to go higher, we come down, we touch $75, $79, $76, and it bounces, it's going to go back up, and there's a really good chance it'll go back up towards all-time high. So I just have it. Candle retracement, a short target for the way I trade short stocks. in the event that we hit a certain level. The standard zone, or the standard, is just your standard fibs, and then the zone just gives me the half back to the 618. That's all it does. Okay? So I'm going to go back to standard, put them all out. Actually, I usually have a 0.88. I don't know why that's off. I know a lot of people don't use those levels. Oh, I got to go black. It's the wrong color. Okay, so this is all the way back to October 22. Like, how crazy. What did I tell y'all about? There are no coincidences. Moose and I say it all the freaking time. But, man, is that crazy? Literally. So, everybody was like, well, shoot, if I would have known that, I would have bought on the 15th of April. No, hell, you wouldn't have, because on the 15th of April, this was the all-time high. Where'd it come down to? The 236. Here's the halfback. It didn't come back down there. And then what happens? Computers will go and tell you there was a demand zone here because we put in a low and we broke that structure. There was a demand zone here, and the fact there was a demand zone at the halfback, computers can reverse engineer that say, hey, price went from here to here, back to here, broke that, this demand zone's important, and then the computers start to reverse engineer how far up this can go to drag the halfback to the demand zone. And lo and behold, guess what computers do right here? Short the shit out of it. Like, what? Yeah, we can't do that. Well, you kind of can. You kind of can. If you think, oh, wait a minute, this gap's important. This gap's important. The gap's probably going to be at the, the gap's going to be at the 232. You move the 382 up to the gap. You move the halfback up to the gap. If this was support and we bounce off here and then we come back, if we breach highs, where are we going to? Probably going to go up to 160. Why? Because the fib structure, the halfback, wherever we stop at, very good idea. Oops, we moved this. Vet's a dumbass, by the way. In case y'all did not know, I like super dumbass. 382 is what I would play. So if we held that gap, and we started moving back higher and we got through the higher time frame supply zone, 135, I would expect us to run to 148. There's ways to do fib extensions as well, but guys, some of the best way to do it is to spot something on a chart and move a fib structure until you can align some of these values with some key zones or a volume profile, a high volume node, not a low volume node. That's the first one, all the way to October 22. You guys need to draw it. Start here, always go left to right. Always go from the original, the start to the finish. Okay? Then we go to the next one. Where's the next swing come from? We got a swing low here, and we got a swing low here. Because we got a demand zone here, I want to use, I want to use this one. I'm going to use a purple one. I'm going to make it a little heavier so we can see purple over black. And that's coming from last October. Now, that wasn't a swing low. If we want to move it, we can move it. But I would say that's how I had it today. Again, we came up, we came down. This was a low point in this. We moved higher. We didn't really come down and retest it. Did we launch from here? Yeah, I mean, either way, doesn't matter to me. I did it from here. I don't care. It's not like I got this scripted out. We draw it from here to here, and look, we came back down to the 382 on Friday. Sam, I'm not a huge volume guy. I do VWAP, volume weighted moving average price. I don't sit and watch volume. If I'm trading it, I watch a 1 minute candle. And all I want to see is above average volume on a 1 minute chart. I'm not a volume. Again, Andrew, options millionaire, man, he could read volume like nobody's business. I don't trade that way. And I found when I start trying to trade that way, I kept missing out trades that I normally hit. So I don't personally trade it. I do watch the 1 minute volume on NQ and ES. But volume profile tells you a whole lot. So here's the next one though. We're going from January or last October, doesn't matter, up to the same high. Nothing else has changed except we got different fib levels. And you start seeing, let's see where I was earlier on October lows. 91, going way back to 22, and 90, the half back from last October. That was this line, the black was a year ago. The purple is, this last fall. Well, that makes sense. And you start seeing clusters. And when you start seeing clusters, the half back, the 618 together, 76, 78 in a harmonic zone, holy shit. You don't think that level's important? Yeah, it is. So if you want to own Nvidia, what do? Tomorrow morning, the market's down. If you got shares, hopefully they're profitable, get out of your shares. What do? Sell the August 75s. Sell the September 75s. Why? Because the 200-day moving average, a demand zone, a swing low, the 618 from last October, the half back from October 22, and then you look at percents from the all-time highs back down to 75. That's 46.74% off the all-time highs. Hell, you're getting the stock half off. So sell puts there. And people are like, well, what if it never goes down there? Okay, maybe you sell half of your shares and start selling puts. Wheel it. Now, I know we got some members in here that remember Cisco in 2000. For folks that did this in Cisco in 2000, folks like myself, I dropped over $1 million in April of 2000. From April to October of 2000, I lost over $1 million in 5 months. 6 months, but yeah, it's painful. It was painful. Can it go lower than this? Anything can happen. It could go to the 618, and you'll see the 618 has got 2 lines on it right here sitting at 60. But, so what I would do is if I own the shares, I'd want to get out of the shares. I've already told you all that. I sold my shares this last week. The only reason I bought 1,500 shares was to run it back up to 115 and get out. Why? Gravity points. So I'm on the weekly, so that's the other thing. I'm on the weekly. That's why these circles look a little bit odd. But all you're looking for is recent swings. Now let's go to the daily. So we got weekly. Really, that's a swing low. They pushed up. That's a lateral. That's a balance, right? Impulse, balance. Impulse, balance. Impulse, balance. Retracement, impulse, balance. Impulse, balance. What is this telling us? Exhausted, overvalued. Stock got too expensive. Probably going to be a supply zone. More sellers than buyers here. Why? They don't want to pay that price. Retracement, balance, retracement. Again, bull flag, breakout, bull flag, neutral, retracement, lower high. As soon as we make lower lows, we stop making higher highs and we start making lower highs, you just wait. If we make a lower high, like right here, if we come down and we make a lower high, all you're waiting for right here, higher high, all-time high, a lower high, all you're waiting for, do we make a lower low or do we make a higher low? That's it. If we make a lower low, what do? I put on my short hat. Because this character changed, right? Everything was higher highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low by a little bit, lower high. Uh-oh. Do we make a lower low? Yes, we did. Any move up to here or up to here, I'm thinking I want to short. That's just market 101. Some of y'all got to get good at that. But you need to get good at one or two tickers. For guys that want to go in there and trade, 9 or 10 different stocks in 3 or 4 different sectors, you got no chance of being profitable. I mean, you might as well lick your first 3 fingers and slap the damn desk and see which one's going to sting the most. You got no chance. Because you need to see, does Nvidia, I don't know this, does Nvidia honor the 236? Does Nvidia honor the 0.88? Does it honor the 618 or does it migrate to the halfback? The 50% is not even a Fibonacci number. The others are. Does it honor the 21 EMA? Does it honor the 50-day moving average? I don't know any of those. You got to know those if you're trading it. But then let's go to the last, most recent, where we are, gaps for retracements. And it's yellow. I'm going to make it +2 so it stands out a little bit. I'm going to take the purple one back down to 1 just for ease. And then we start going, okay, from the April lows, I don't know anybody that didn't want to get long at 750, 75, but it was 10 for 1 split. But 75 up to 140, almost doubled your money, 86%. Down, not up. But in the event that we work that, now the yellow structure comes in. Well, now look, so we got another yellow line in this cluster. We got a yellow line in this cluster at the top of the gap. That's where we finished. That's where we finished Friday. That's where we wicked down to. So you just need to get in the habit. Well, the halfback to the 618 should hold. Well, it ain't going to hold right now, not with NQ at 18,127. It's going to be under pressure Monday. If we do spike down and fill this gap and we get down to 96 tomorrow morning because all the market's red, everybody and their brother and sister is going to be selling Nvidia or buying puts on Nvidia. Not me. I'm going to sell puts on Nvidia right here. I got the 200-day moving average. I got a higher time frame demand. I got the 618 from October 23. I got the halfback from October 22. And I got the low from current swing. Can it go below that? It can. But if it does, I got ways to trade it. You wheel it. But I'm going to sell puts here tomorrow or whenever I can. So now you just, and again, are fibs everything? Not at all. But they're a good idea for you to be able to see where we break structure. Where do we break structure from? Here we broke structure. We made a lower low. We came down. We made a lower low. We made a lower high. We made a lower low. We made a lower high. You know we're going to make a lower low. So then you go over here and look, and this gap fill is going to be important. I don't even know what this line's here for. I draw on the charts all the time. You guys should too. It's like a fucking etching sketch. Draw and shake it. Go hit clear all. Do it again and do it again and do it again. Muscle memory. The more you do it, the more it makes sense. So now let's look. I got some rectangles here. So we got another supply zone. Why do we got a supply zone here? We broke structure. Made a lower low, right? So we got another supply zone. So this higher time frame one's not going to get taken out for a while. This one, however, might be in play. Again, Nvidia split at 220. Their split date was right here, or 120. Close was 121.9, 122, and the open was 120 quarter. Doji, right on the freaking split date, split price. It's our supply zone. What else we got? Demand zone. If you draw it from here, The demand zone's here. If you draw it from down here, it's here. Well, why would I draw from here, from here? Well, we went higher and then we made a higher low. Again, you could argue either. The reason I just drew this one just now with you guys on is because this is where the circle was. Again, don't split hairs. Well, which one matters? I don't know, but you know what? If your trade and success is based on 84, 81, or 80 half, you're in trouble. You're in trouble. So I'll just delete this one, and we'll just stick with the bigger one. You got to go to the 4 hour and look, where did we swing from? It's probably here, but I already had the circle here, so I would just leave it. Now let's talk about channels. Parallel channels. Moose talks about it in stream for some of our members. I do it more on a daily. I don't draw them during the intraday, but I'm looking at a trend line, right, from here to here, and that works. Usually with a trend line, guys, you want 3 touches. You usually do. Well, instead of a trend line, I always go right here and I draw a parallel channel. And so I'll draw my trend line. And then I'll pull the channel down and I'll catch these last 2. And then I want to extend it up, and damned if the top, the third touch was a gap open. So we came back down. Now, are we going to dip below here, fill the gap, and then get back in the channel? More than likely. But I don't think we're going to get back in the channel until Wednesday, and that's only if there's not a lot of stuff going on in the Middle East. So don't get horny buying, right? Look at your fib clusters, and you see this? 1, 2, 3. You guys want to talk about how Nick draws circles? Nick draws circles when his NQ has got 1, 2, 3 fib structures and a high volume node and a gap, right? Here's a circle. We got 1, 2, 3 fib structures, 200-day moving average in a demand zone at a pivot. That's a circle. So instead of longing Nvidia tomorrow or Tuesday, I would sell puts and use the puts to pay for some calls. How high of calls? I'm trading the 107s for Friday, but I'm only trading the 107s is because I already had this fib structure done and I had the parallel channel done on Friday, and I'm like, man, if we hold the 100, we're going to go back to the 108. That makes sense, right? The halfback. So again, if you go to the zone, if you don't want to worry about all the different levels, build yourself a template and just put on the zone. And there's our zone. I don't know why it goes gray. That's my zone. That's the zone from April to the all-time highs. And that would, again, look, the zone matches up right with the downward channel. You can't make it up, guys. Price, volume, and time. There are no coincidences. So everything's starting to fill itself out. And then the last thing that I would do is I would go here and I would say, do we notice any structure, any pattern? Shoulder, head, neck, shoulder, down. So I'm not saying this is 100% right. I'm on a daily. I drew it on the 4 hour. No big deal. If you drew the structure this way, if you drew it, I might have did it with ETH. In the event that you drew it, just know this. If your shoulder, if you use this, if your last point is above the neckline, it won't color it in. I would recommend dragging it down below. It doesn't matter how far you drag. It does not change the head and shoulders. So even if you drew it here to the 18th of July, that's a complex. That looks awful, but that's what it was. I shared this with one of the members Friday that was underwater. Yeah, it was a 4 hour. Much cleaner, right? And then with it, I can just, I can't move on this. But all we do is from the head. Let me do it. Let me do it on the chart so you guys can see it. It's cleaner. Oh, and I bet I had ETH on too. Yep. That's what it was. I was like, man, that thing looks gnarly. Big difference in the 4 hour than the 4 hour. So here's all you do. If you want to draw it, again, it doesn't have to be perfect, guys. You're just trying to get an idea of where the neckline is. They have a good tool for it, for drawing, any of the Elliott wave stuff. I don't even know what the hell these things are, guys. I'll be honest with you. And 3 drives and pitchforks and all that stuff, but just head and shoulders. You draw it, it gives you a neckline. Go down, grab your price range tool, go straight from the head, straight down till you intersect the neckline. Period. It gives you 25.98. I right click, I clone it, I move it over, I drag it, and I'm like, okay, if we hit it, if we hit the neckline, this is where we should go to. I put on a trend line. All I do on the trend line, where'd that go? No, it ain't there. I'm going to go to a trend line, and I'm just going to go to this neckline and this neckline, and it draws it. And so in the event that Nvidia takes out the neckline, you can slide it on down. It ain't going, again, the further it is, we broke the neckline right here. So we broke the neckline right here. So from the head to the neckline is 25.91 points. So from the neckline down 25.91 points, this will complete the head and shoulders. It will fulfill it. Period. There's no if then. Now, if the market goes back up here above the shoulder, it invalidates the head and shoulders. But it's still working on it. Could this take a month? Could it take a week? Could it take, tomorrow? Tuesday? I don't know. What I do know is this pattern that a lot of people trade, it ends ahead of where? My April lows, my higher time frame demand zone, the 200-day moving average, the 618 from October 23, the halfback from October 24. So now I can safely say, hey, I'm going to sell puts here, and in the event that Nvidia flushes, the rest of the market's going to flush. Well, I got news for everybody. There's a lot of shit going on in the world with Middle East right now, and it could get really bad. However, there's also an election in November. They do not want this stock market. They, being the current administration, do not want this stock market lower. Substantially lower end of August and September. They don't. Are they going to cut rates in September? Yes. If Nvidia is down below here, it's going to be a 0.5% cut. And we should bounce back up. Again, the market's not going to go straight down and not give you a chance to exit. This is a better entry than anywhere on this chart. And you're trading at a significant discount from the all-time highs. Guys, that's how we get in the process of building out charts. Now, what does it really mean? Well, let's put on Momo. And let me take off ETH. And look how Momo changes. Because I'm on the 4 hour, dumbass. Let's put on Momo. It's hard for me to see it on a dark chart. Let me just make it a little bit darker. So Momo is now oversold, and now it's more oversold. Even though the daily's correcting back, the weekly is more oversold. And then I look at the gravity points. And the gravity points are saying, hey, don't be surprised if we push back up here. Wait a minute. We pushed back up here Tuesday, Thursday. From Tuesday morning, long, back to Thursday, money. You guys had the 115 calls. A lot of ITG members had the 115 calls. I got long. Earlier and took the 1500 back to 118. Again, the 115 calls paid out huge money the last week. And so now I'll be looking for another Nvidia trade if we get back down here. Now, I know right now Nvidia is priced at a huge discount relative to QQQ. So in the event that I want to trade options, what I might do is I might go out till September and I might sell here. Or I might get real heavy and sell the 60s. You see there's two lines here. There's two lines on the 60. 786 from October 23 and the 618 from October 22. Maybe I'll sell the 60s and I'll use the 60s to buy the 90 calls for September. As long as gravity point A is above C and none of them are negative on the daily chart, there's no negative slope. Positive slope, positive slope, positive slope. Even though A is coming down with a positive slope, I'm still expecting a bounce. The caveat we have is what? The damn NQ selling off tonight. So when you go back to this zone, I can't do it there. Let me see if I got another chart. When you go back to this zone, maybe it's the one I shared with Rick today. I'll just put up the one I pulled up earlier. When you go back to this zone and you start looking at the neckline, and we work right here, bottom line is above 110, we're probably going to go long to the midpoint of this channel, about 115, 112 to 115. If we fail the 99 zone, if we fail last week's low, we're probably going down to 96. 96, not a real big deal. 86 fulfills the head and shoulders. So don't get horny this week because what's going on with NQ in the Middle East. If there was nothing going on and it was Saturday or it was tonight and the market is completely flat, I would be the first one to tell you guys, man, I would put in a long to get, as soon as this gap gets filled, I would ape in at 196 and trade it back up to 108, 107. Now, I'm like, I want to wait until it gets above 108, 110 to take longs to move back up to the gravity point. Again, it should move back up to the gravity point, but we just had a push. And now we've got some massive issues going on geopolitical. Okay? Now, if we get up here and it overcorrects on the daily and we reverse back down and we drive down, we get oversold on the daily and oversold on the weekly, and we're down in this zone, I'm going to go find my next cluster. It might be the head and shoulders fulfillment. It might be the 382 in the halfback. It might be the higher time frame demand zone. It might be Thursday, and we might be down here at 78, 77, 76, and I'll trade it from there. Okay, anybody got any questions? I'm not on, let me see if anybody's talking on YouTube, because anybody on YouTube got any questions? Yeah, 98, 96. Oh yeah, ETH. Yeah, that's one thing I hate about TradingView is you got to go to ETH. Yeah, here's our wick low. So it's saying 90, 99, 91. Somewhere there, just under 100. But that was Tuesday morning. So great opportunity. I put on 1,500 shares. It's the first time I've thrown 150K at a stock in, I don't know, at least a year, probably a year and a half. I usually don't trade stock, but it was pre-market, and ain't nothing you can do with Nvidia pre-market unless you're trading stocks. So I had calls. I had the 115 calls. They were way underwater. I basically doubled down. I had 10 calls, not 15. I had 10 calls at 115, and then I bought 1,500 shares. As soon as the market went up, I closed out some shares. The shares paid for the calls. Market rolled up. I sold more shares. The market rolled up. I sold my calls. The market rolled up, and I sold my last lot of 200 shares at like 118. So, is what it is. Not a big deal. The process, guys, I can't emphasize enough to start off, hey, where are we? Where are some key levels? What's an obvious gap? What do we know from the gap? Then where's our swing high, swing low? Maybe this is a swing low. Here's a swing high. Here's a swing low. Here's a swing high. Here's a swing low. And then from it, let's start building structure. Supply, demand is structure. Guys, those are cornerstones in buildings, right? You got to set the edge, right? They're the cornerstones, the edges in the puzzle pieces. If you don't have the edges, swing low, swing high, the four corners in a puzzle, how the hell do you start a puzzle in the middle? Man, what's the easiest pieces of puzzle to find? The four corners. Go get the corners. And that's just literally as simple as, here's the 50-day moving average. Look, we broke it. We hit the 100. We went back to the 50. We came back and closed right above the 100. Well, maybe we'll go to the 200 tomorrow or Tuesday or Wednesday this week. It's there. Put it on your charts. You don't have to have a momentum indicator. You don't have to have the gravity points. All the other stuff I've showed tonight are free, completely free. Man, when you start putting it all together, though, man, you get a really clear picture as to where Nvidia might go. It's no different than having 26 different algorithms predicting SPX's ranges and have them visualized and then put them on your chart and then knowing where the PWG, the auto, and the baseline, standalone models are projecting SPX. And then when you got them on your chart, you're like, well, shit, if we get down here, man, I'm going long. I'm going to make some money. If we don't get down here, I'm going to wait for ending what? Ending one-time framing lower. Ending one-time framing higher. Get yourself in a habit of working and looking at a 30-minute chart, maybe a 1-hour chart, but 30-minute for certain. Take off ETH. Look at regular trading hours. One-time framing. It's simple. Lower low, lower high. One-time framing down. Higher low, higher high. This 30-minute is one-time framing up from this one. This right here, two dojis, we go from one-time framing down to one-time framing up. You quickly grab your ray or a box and you say, hey, I want to trade. I don't want to trade in here. But if this candle right here doesn't break out from below here, we're probably going long. If it breaks above the high, you're long. If it breaks below the low, you're short. What's my target? Right here. What's my target? Right here. Again, it's that simple. On a 30-minute candle, you literally could place a profitable trade just right there, looking at what? Wick high, wick low, one-time framing down stopped, one-time frame started. Next candle is going to tell me, are we going to have an inside bar, an engulfing bar, or one-time framing up? And the answer was up. We stayed above the wick. As soon as we broke above the wick on this candle and we closed right there, automatic long, 105.86 for this target, 107.61. Guys, I don't know about you. That's freaking $1.80. How can you not? Closing price 105.90 to 107.40. $1.50. Free. That is just reading price action, nothing to do with fibs order flow, volume, EMAs. That's just, man, I only care about these candles. They tell you so much. These candles tell you so much. We screw it up because we want like 40 of these. Right? We want everything on a chart at once. And it doesn't have to be that way. Now, I don't like showing this with Momo on here because people will be like, damn, I could trade this Momo indicator all day. Man, if you're trading Momo on a 30-minute, you might as well go to Vegas. You'll have more success and more fun. So don't do that. But seriously, this is just one time framing up, one time framing lower. Right here. Lower low, lower low, lower low, lower high, lower low, lower high. Boom, stop. Tuesday, Wednesday we gapped open. What do we do? Again, if you're in this spot, yeah, I probably shouldn't do that. What the hell? Let's do this. Let me find a big candle. Here's a big candle. Here's a couple of big candles. Here's how you know what. Oh, I can't take them off. Go to a 1 hour candle on Nvidia. Take a fib structure. Let's say it's an earnings candle. High to low. Got the zone in here. Guys, if the next candle does not get back up into that zone, we ain't going higher. Period. If you want to do ES, we got a big ES candle tonight. NQ has it all the time. Look at NQ. Let me pull that off. Watch this. Opening candle. 5-minute chart. Opening 5-minute candle. Low to high. As soon as we take out the halfback in the 618, as soon as we take out the 618, automatic long, 343 back to the highs. 343 to 386. Boom, out. People said, how'd you get out at, we didn't quite make a high. How'd you get out at 385? As soon as we broke the 618, we're going to recover it. That's the market. As soon as we refailed the halfback, did we make a higher high? No, we did not. Made a lower high here. So what are we looking for? Is the next swing going to be a higher low or a lower low? As soon as we failed the halfback, where are we going to? Back to the lows. Back to retest the lows. As soon as we sweep the lows, we ain't going back up into this yellow box. So if you're bag holding and you're waiting for longs and you're like, hey, I'm going to weekly demand or bust, well, I hope you got enough food till Wednesday, because the way this market is we aren't going back up here tonight. So if it wasn't tonight in Globex and it was Monday morning, and this is Monday's open, and this is where we are at 10:05, at 10 o'clock, and then we come off, and this is where we are at 10:30, and we fail it at 10:30, where are we expecting to go for the next hour from 10:30 to 11:30? Lower, baby, lower. Absolutely. And then where? Lower, and then we don't take longs until we take out the 11:30 high. When we take out the 11:30 high, we're going to work back to the box from that one big candle. Again, you guys can do this. It's not impossible, but you got to be able to. You got to understand it. I've been doing this for 30 years, so it's easy for me to talk about it. What I don't want you guys to do, anybody that's just joining us tonight, I don't want you to go, damn, he makes it sound so easy. I'm gonna be a millionaire. I'm gonna quit my job. I'm gonna join Discord, and I'm gonna make a lot of money. Don't fool yourself. The reason it's hard is this is the most difficult endeavor I think there is in the country. I think it's harder than being a brain surgeon because the brain's only got so many different moving. There are so many moving pieces, parts in this model, in the market. It is impossible to master. So you got to master your setups. You got to control your controllables. What you do really well, fucking do it as often as you can. What you don't do well, you do it with paper and simulation trades. And you got to discipline yourself. I don't have the dailies on here. Daily, I'll do Rick's. I just want to see if the daily's right here. Sell target 3. Look at that. Sell target 3. Again, I was doing the workshop. Sell target 3 right at a harmonic zone. And how many zones were we down? 320. This is how bad I am. $75.46. 4 1/4 rotations lower. I told y'all 4 is what I thought we'd go. We went straight to sell target 3. Again, you guys know this. We got below daily S3. We got below it. We didn't come back and retest it. When we go below S3, we open the door for what? Daily sell target 3. That move right there from S3 to sell target 3 is the highest probability move there is in all the PWG levels. All the PWG levels. S3 to sell target 3. That is the number 1 trade. Number 2 trade, S2, sell target 2. Number 3 trade, R2 to buy target 2, and then R3 to buy target 3, and then S4 to sell target 4. And again, Nick's got the stats. They might not be 100%. I don't keep them. I just have traded them for so long. It's just a process. Anybody got any questions? YouTube folks. Again, and tonight might not have helped you. Hopefully you learned something and didn't sit here for a couple hours. But the intent was to kind of go through the process of building charts. Go through the process so you kind of have an idea, a really good concept as to what to expect and why. And again, you guys get in the habit of watching people's YouTube videos on the weekends and you see their videos and their analysis. Screw that, man. Do your own. And you know, who gives a shit if you screw it up? Do I have my SPX? I got way too many. Look at all these charts. Man, TradingView should charge me extra. I thought I had I don't know if I got it. My SPX chart that I posted on Twitter on SPX Head and Shoulders. I don't know, a month ago. Man, that shoulder wasn't even the freaking armpit. We made a new one. Draw a new one. People are like, that dumbass doesn't know what he's doing. I'm drawing patterns that might happen. No. I don't think the bottom is in for SPX. I think, again, PVI. PVI is way down here, folks. What are we doing here? It's not letting me erase it. Oh, that's why. Still drawing. I'll clean it up. PWG's right here. 52.13. I will be dumbfounded if we don't take that out early. But I would also be looking for 52.13 to bounce. And then I would go back to the range profile. I would go back to the range profile. And we hit 52.13. Where are we right here? 52.13. This is where PWG is. Look at the cluster. There's a lot of hedge funds here. 2, 4, 5, 9 models have us right here around 52.05, 52.13. So I think we'll breach it. I wouldn't sell PWG this week. And then if we miss that, then we're going down to this one at 51.65. Where's 51.65? In freaking no man's land. Okay, so this void right here is this void right here, and that's called BFE. It could be for real BFE this week in the Middle East. Then we got auto and baseliner right in here. And then we got PVI hiding behind that big mound. There's 5 models that are projecting that we're going to finish at the low end of the cluster. That's scary. Versus the high side, all the models are at the front end. Which means we're going to get there and bounce. If we get there, we'll reject it. We'll get there. We'll reject it. We'll get there. We'll come back down. These models, it's going to stop right here. So if I was selling call side on the way up, I wouldn't have a problem selling just above this one. I still think this void and this void right here, the way I've seen these models play out is, man, it runs through these really, really fast. But right now, everything's negative, man. We're at 18,120, 18,130. ES is off 68 points. So take 70 points off 53.46. I mean, we're down at 52.70 right now. So we're already right here. I mean, we're going there, folks. Almost without a doubt, we're going there. So give yourself back ratios. Also give yourself some grace if we do bounce. Play the bounce with a call debit spread higher. Do not run in. Do not rush in. Don't sell calls. There's a 99% chance we're going to go back to weekly demand. If we bounce and it's flat and then we grind higher and we get back to weekly demand, then maybe you sell the calls. But this week is the week of all weeks, guys. If you can get long, put on some longs down here. I sell theta 100 wide. Everybody always asks me why 100 wide. Here's the deal. If you're selling theta, and again, I'll fight every person at Tasty Trades and any other furus that you guys follow on YouTube or anywhere. I'll fight any one of them and throw the bullshit flag and stand my ground. I don't care how much money, how many years they've been doing this, how smart they are. Guys, you sell wide and you buy tight. The reason why is if we go down to 50.90 and we go, let's say we go to, we ain't going that far. Let's say we go to 50.30 just for 31. Let's say we go 40 points under PVI. If you got 100 wide, how many points did you lose? 40. If you got 250 wide, how many points did you lose? 40 on 2, you lost 80 points. You lost twice as much with the same risk. If you saw 425 wide, how much did you lose? 160. For the same risk, 425 wides is the same risk as 100 wide, except it's 4 times harder to hedge And if we breach by 1 point or 30 points or 70 points, you're going to lose 4 times more money. Why on earth, for the same risk, buying power risk, for the same portfolio risk, why would you put yourself in position to lose more money for the same premium? One 100 wide is going to pay you almost the exact same of 425 wide. Except one 100 wide, you're going to lose 2 points if we finish 2 points in the money, versus the 4, you're going to lose 8 points. I don't know who the hell thought it was a good idea to tell people to sell 25 wide credit spreads, but they absolutely don't know their head from their ass. You're going to lose more money than you'll ever make, and it's not a good system. I'm sorry, but straight up, I don't give a damn who you are, short of our holy Savior, you're freaking wrong. Sell as wide as you can sell. Learn to hedge it. I don't use stop losses. I don't roll to next week. I don't roll to next week because the market doesn't have the data for next week. Why would I put myself at risk next week when I don't have the data? I've got all the data I need right now. I got 26 models, and I've spent a lot of time going through all the SPX levels and the charts and build them up. Why on earth would I want to roll it out into next week when I have no clue what's going on? To give myself time so I can smoke some hopium? That makes no sense. That means you could take a bad trade and make it worse. I.e., when you roll, you are taking a loss on this week's trade. And now you're opening up next week's trade with no data, which means the market is controlled. That's like losing your ass on a hand of poker. And then all of a sudden you say, you know what, I'm just going to put the rest of my chips in, and you ain't even got your cards yet. Why would you put your chips on the table before cards are out? That don't make no sense. That's why, again, I can't stand the rolling thing. Now, is there art behind it? Absolutely. It's not mechanical. And a lot of people like mechanics. Well, if you want a simple mechanical system, congratulations, you're going to have a cookie cutter home. You're going to have a cookie cutter home because you got a cookie cutter trading system. If you want a freaking custom, $2.5 million home, you better have a custom trading plan and system and a way to manage it. So I built the best way I know how to build to hedge against PVI, and it will hedge as we drop certain levels. We're going to work weekly R2. We're going to work weekly. In this case, we're going to work weekly S2. We're going to work weekly S3. We're going to work moving averages. But we're not doing any hedging before Wednesday, hopefully. Now, if we get below auto, 51.15, and I only got 40 points of breathing room on Tuesday because something going on in the Middle East, I'm not going to let PVI lose 100 points. People are like, oh, but your max loss is $50,000. Well, we ain't lost money since December 22. Actually, December 21 was the last time PVI took a loss on the weekly. It's crazy. And again, I don't want to sound arrogant or any of that. It's hard work, guys. It's not easy. Ask the ITG members. But man, it's been profitable. We've had 8 closing breaches in the last 3 years. 22, 23, and this year. Actually, 21, 22, 23, and this year. So the last almost 3.5 years. 3 years and 8 months. We've had 8 losses. What's 52 times? We've had 8 losses out of 164 months. Closing breaches. Not we took losses. Like this week. PVI might breach, but if we hadn't sold anything, we're not taking a loss. FOMC week. If we sell options on Sunday night and we close them by noon on Wednesday, up 70%, and the market drops and breach PVI, we don't care. So again, that's your 95%. That's 95% of the weeks we hadn't had to close the trade. We hadn't had to do anything. The closing breach has only been 5%. Go try and do this with a 5% delta. Go try and make $59,000 in 31 weeks with no losses trading 5 delta iron condors. Good luck. It's hard. It's not easy. It's my fit. It's what I do. It's what I've built. It's what I hung my professional hat on. I built a hedge fund up to $121 million by myself. I sold my company in 2012. I've been retired since. I don't take paychecks. And it's not like I'm smart. I've had a lot of people help me through the years. That's why I always hashtag everything, traders helping traders. I want to help some of the guys in YouTube, some of the guys on Reddit get profitable. Maybe this is not. Selling theta might not be your fit. That's okay. It's not going to hurt you. It's not going to hurt you to know, ballpark, where's SPX going to go this week? Even if selling theta is not, how do you trade it? Well, if I'm a delta trader, what am I going to do? I'm going to put on a call debit spread right here and probably a call debit spread right here. Not a big one. But if either of those hit, you're going to make some money. There's different ways, a million different ways. All right, guys, my wife's texting me, so it's time for me to go inside. Enjoyed this evening. Hope it helped. Some of you guys kind of see there's a lot to market structure. We got 1,200 so members in our subreddit. Ask questions. Guys, the community can only get stronger when people interact and there's discussion. And so if it's just me posting and you guys liking my post on Reddit, it's not worth my time if you're not interacting. If you got questions, guys, ask. And if you got questions, there's probably 5 other people that got the same question or a very similar question. Let's trade in there. Let's talk in there. Let's communicate in there. You can do it on Twitter too. It's just if you DM me on Twitter, you're going to be the only one that hears the response, and that ain't fair to all the other people. If you're embarrassed or it's a personal question, then that's a different deal. Shoot me a DM or a message. I'll answer when I can. I do not answer Reddit questions or Reddit DMs. I get up at 4:43 every morning. Coffee is ready. I got coffee. I'm at my desk before 5 a.m. local time, 7 a.m. Eastern time. I trade. I don't answer DMs. I don't respond to Twitter. I don't do any of that stuff until I go in. Every morning I go in, I do my homework. You guys in ITG know I do my homework from overnight. I want to know where the Asia session was, the European Open was, where settlement was, where midnight was. I go through my process and I trade. And when I trade my real account, then I trade my managed accounts. And when I trade those, then I go trade the prop firms. When I've traded all those, if the market still hadn't opened and I've hit all the daily goals, then I'll jump on Twitter. You guys can already know, man, if you see me on Twitter before the market opens on a Monday, I've already made humongous money. So with that, guys, I'm out, I'm around, I'm available. Make some money, ask questions, learn. Do not size up. I guess the last thing I have to tell everybody, trade smaller than you think you should. Why? This will be the week we breach PVI as soon as everybody apes in trades. I promise. The market knows. As soon as that one person, listening, as soon as that one person puts money on the table, the market's going to take it. And you're going to screw all of us. Do not size up. PVI, trading this system, is not a get-rich-quick scheme. It is hitting base hits, making $1,000, $1,500 to $2,500 a week off $50,000 at risk. Over the course of a year, it's typically somewhere between $95,000 and $110,000. But it's all $50,000 of risk. So it's about 100% return off a $100,000 portfolio. Never risk more than 50% of your buying power. And if you're buying stocks, don't ever put more than 5% of your portfolio in a stock. And if you're trading options on a stock, understand the leverage. Just because options are cheaper, they give you more leverage, that doesn't mean you put in 5% of your buying power in options that are leveraged 4-to-1. That's 20%. Don't do that. I've done it before. Don't do that. Don't be me. All right, guys, I got to roll. I'm out. Appreciate everybody joining in, and have a great, wonderful week. All right, peace.